Hello, friends. This is Brant Spessart, founder and president of Steward Wealth Strategies. Whether you've been with us for years or you're joining us for the first time, thank you for taking time to join us as we walk through the economic highlights from the fourth quarter of 2025. Or more appropriately, I should say, thank you for investing your time with us today. At Steward Wealth, we believe an informed client is our best client. These quarterly updates are designed to provide clarity and perspective, but not predictions. As you watch today, keep in mind that this is a review of the months of October through December of 2025. Our goal is to help you understand what's happening in the markets, how it may impact your personal plan, and how we think about navigating change with intention and discipline. That approach starts with a comprehensive financial plan. Everything we do is rooted in looking at your entire financial picture, not just one piece of it. There's more to financial planning than just investments. But this includes retirement planning, investment planning, tax planning, protection planning, estate planning, and one of our most favorite topics, generosity. These areas are interconnected, and while markets may fluctuate, a well-built plan helps keep decisions aligned with your long-term goals and values. With that foundation in mind, let's look at how markets performed during the fourth quarter. 2025 marked the third consecutive year of double-digit equity returns. That extended the current bull market. This strength was driven by several factors, including 3 Federal Reserve rate cuts, continued momentum in AI-driven technology earnings, and broadly positive investor sentiment. During the fourth quarter, major U.S. equity markets reached new highs. The S&P 500 gained over 2% during the quarter. Closed the year over 6,800, which represents approximately a 16% gain for 2025. The Dow Jones, it finished the quarter up 4.5%, closing over 48,000 and ended the year up roughly 13%. Now, alongside strong equity performance, inflation continued to show incremental signs of easing, while economic growth remained resilient. This balance right here is often referred to as a Goldilocks environment. It's not too hot, not too cold, but it helps support investor confidence throughout the quarter. People felt better as investors. The November Core Consumer Price Index, CPI, now the core excludes food and energy. It came a little cooler than expected, rising about 2.6% over the prior 12 months. So inflation wasn't really that much of a concern like some thought. Now, as inflation moderated, interest rates also moved lower. Rates were reduced twice during the fourth quarter. That totaled 50 basis points as a reduction and ended the year in a range of 3.5 to 3.75. That includes a September cut that happened, so 3 consecutive rate cuts in the second half of the year. Now, as the year concluded, the Fed projected the potential for additional rate cuts in 2026. They indicated those rate cuts may come at a little slower pace than what we experienced in the latter half of 2025, but we are hoping for and anticipating some rate cuts this year. Now, the bond market reflected a more stable environment as well. The fourth quarter of 2025 was relatively calm for U.S. bonds. By the end of the year, the 10-year Treasury was about 4.1%, the 5-year Treasury was about 3.7%, and the 30-year Treasury yielded about 4.8%. Bond performance continues to hinge on the direction of interest rates. So if rates move lower, existing bonds may increase in value, which was actually kind of good at the end of last year for bond investors. Now, if inflation pressures persist or rate cuts slow, yields could move higher. Bonds can play a really important role in diversification for, particularly more conservative investors, but you just have to know they do not guarantee against a loss or ensure a profit. Another important theme that we continue to monitor is the cost of safety. Lower interest rates mean we're probably getting paid a little less for safety. Many traditional savings vehicles they're offering relatively low yields. Now, according to Barron's, at the end of December 2025, the average bank money market was about 0.5% nationally, and the average 12-month CD was about 1.9% nationally. Now, I know many of you may work with local community banks or credit unions, maybe get higher yields. Some of you even use us and you're getting high yields, but those are national averages. Now, here's the thing to keep in mind. Cash does play an extremely important role in a financial plan. cash needs to be a major component of emergency funds. At the same time though, excess cash is sitting idle, technically long term, can lose purchasing power if it's not earning enough to keep up with inflation. So if you'd like to explore alternative options, or you have questions about cash management or how it fits in your overall plan, look, we highly encourage you to reach out to our office. Now, if we think about 2026, most market strategists expect the bull market to continue, though, most likely at a more moderate pace. And I think most of us would feel that way as well. Now, while analysts are generally optimistic, do understand that market pullbacks are a normal part of investing, and they do occur on average about every 18 months. So this reinforces the importance of remaining prepared, or I would say be prepared, the Scout motto, but also staying disciplined. 2026, it's a midterm election year, and that could create a little volatility. Historically, an election year introduces additional uncertainty for investors. They think about things like fiscal policy change, regulation, spending. So let's be prepared and anticipate volatility. Even in optimistic environments, we have to know volatility is part of the investment experience. Remember, what's the cost or what's the price for long-term growth? It's volatility. One of the biggest lessons from 2025 was the importance of discipline and perspective. Early in the year, markets experienced meaningful volatility. Yet by year end, investors who avoided emotional decisions, they avoided hitting the panic button. If they stayed the course, they were ultimately rewarded. Now, when we zoom out long term though, let's look at 40, 30, 20-year timeframes. Look, markets have experienced significant downturns long term, but historically, long-term investors who remained invested, followed a disciplined approach, have been rewarded over time. Remember, markets are volatile. Markets go up and down weekly, monthly, quarterly, annually, but over the long term, markets have grown. Let us keep up with what's going on so that we can have conversations with you and focus on what's in you and your family's best interest. But just know we are here for you. So reach out anytime you have questions or concerns. Your financial well-being, that's our priority. And as your financial stewards, we closely monitor what's going on. And we want to keep up with areas that we believe are important to your financial well-being. So we'll keep you updated on developments that could impact you and your financial plan. So as always, just know we're here for you. Your team at Steward Wealth Strategies is here to answer questions, discuss concerns, but also help review your financial plan with you so that you can feel confident that you're moving in the right direction. One of the greatest compliments we can receive is when you introduce us to others. Many of our best clients come from our best clients. If you know somebody that could benefit from some financial guidance, maybe a second opinion, and you'd like to make an introduction, or possibly you would like us to come out and speak to a group or a class, like Financial Peace. Steward Wealth Strategies has our ambassador program. It's one way we continue to serve others like you and continue to build meaningful relationships, but also make a difference for others. Please keep up with us on social media. This is where we share content about what our team's up to, celebrate accomplishments, highlight our people, but also the culture behind what we do. But ultimately, I want to close with how I started and say thank you. Thank you for investing time to watch this or listen to this, but also thank you for entrusting us to be your financial steward. It is an honor to serve you and your families. As we move into the year ahead, our commitment remains the same. Steward well, plan thoughtfully, and walk alongside you with clarity and care. Thank you so much, and God bless you, and we hope you have a prosperous new year.